All right. Now, whenever the talk turns to China, it often focuses on commodity. For example, coal, iron, copper, aluminum. Our next guest has found perhaps another sector, China's approach to funding solar projects. Jack Hidary is the chairman of Primary Insight. Jack, it's good to have you with us. Thanks for coming in. Good to have you back for a while. Now, what's the story with China's solar industry? This is all government-sponsored energy?
Well, you have both the central government and the regional governments. China has realized that energy is one of its core needs and challenges. As you know from recent news, China is running around the globe trying to secure energy supplies.
So it's just that story about China going into Africa,
Nigeria,
Repsol.
And they may be rejected by Nigeria in the current story. Kazakhstan, China, the Sovereign Wealth Fund just bought a big piece of Kazakhstan gas and oil. So they're desperate to go around the globe and lock up energy supplies. What they're also realizing, though, is that they have some independent supplies right there in China, such as the sun in the Gobi Desert. And so they just cut a deal with First Solar, FSLR, for a 2-gigawatt solar plant.
Now, but is that really going to get built? I mean, you know, they cut these deals all the time. They talk about the money that's going to get allocated. I mean, how much of this is really going to turn into reality?
Sure. Here's what's real now about China and clean energy: production and export. So look at Suntech, look at LDK, Trina, Yingli. There's actually now over 150 solar companies manufacturing solar in China. In fact, it's not just the central government. Provincial governments have gotten into the game, and they're giving cheap to free capital to local companies to transfer from being electronics makers to solar panel makers.
All right, but having said that, I mean, if you give cheap or no-cost capital to a company to actually make something, what does that do to the whole profit picture of the industry? I mean, doesn't that cause profits to collapse?
Well, right now, there's an artificial bubble that's expanding right now in China in terms of solar. So right now, because of this cheap capital, by the provincial governments, by the recapitalized banks. Remember, most of the leading Chinese banks have been recapped in the last 3 years. They now have that capital to give to these solar companies. We're seeing the expansion of a potential bubble in solar in China. But in the near term, what we're going to see is Suntech and other leaders lead not only in export, but also lead in domestic production.
So they could actually pull out all the stops, and that would hurt anybody who's not a manufacturer in China, right?
Not only that, but look at Q-Cells of Germany. Suntech will overtake Q-Cells as the #1 solar supplier in the world this year.
All right, so this means very inexpensive solar production that has the knock-on effect of hurting the competition overseas that doesn't have these same kinds of subsidies.
That's correct.
All right, so is this the government's plan? I mean, is this where the energy policy of the government is centered? And is there something that the United States should pay attention to when they look at what the Chinese government's doing?
China's looking at energy now and trying to get everything in its portfolio. Coal is 80% of Chinese power generation right now. They're using natural gas, they're using solar, they're using wind. They want everything because of the needs and the challenges. China is bouncing back now to the kinds of GDP growth rates that we saw pre-recession. That means energy usage. That means oil importation. That means coal importation from South Africa, Australia, and other sources. And it's going to have to...
They're still wrangling, right? They're still wrangling with the Australian iron ore producers on a price increase there.
That's correct. So China's having difficulty overseas locking up its energy needs. It has to look domestically to start producing some of it, and renewables are going to be part of that portfolio.
Now give me a perspective on domestic China, because, I mean, you've just come back really from the World Economic Forum that was held in Asia. That was
in China.
In China. What was the mood there? What was the feeling? Is there going to be continued growth in these markets?
The feeling is that China is probably going to lead the world along, perhaps with India and a few other countries. But China certainly is probably going to bounce back to its pre-recession GDP growth levels before the United States does and before the EU does. There's a feeling that because of the infusion of capital by both the China Sovereign Wealth Fund as well as the provincial governments, who now are flush with cash because of the recap of the banks, we're going to see some of the pre-recession growth rates, even if initially it's artificially inflated by these stimulus measures.
I'm glad you mentioned this concept of artificial stimulation, because, I mean, you talked about how we might be getting a bubble in the solar business in China. Is it possible we're going to get a bubble in asset prices in China because of all of this government stimulus? I mean, how many of these loans are actually going to be made good?
Well, it's a great question. In terms of, if you look at the loan analysis, a recent study by the IMF took a look at the loan portfolios of some of the leading banks in China, indicating that the credit analysis is not much better than it was pre the recap and pre the quote, restructuring of these banks. So watch out for some of these loan portfolios going forward.
All right, we're going to continue the conversation. We've got more with Jack Hidary. We're going to talk about technology and technology expansion in China. What about the growing mobile phone business? We'll find out the details. This is Taking Stock on Bloomberg. And a programming note, Taking Stock, it begins each weekday afternoon at 3 p.m. Eastern on Bloomberg, 1130 a.m., XM Channel 129, and Sirius Channel 130. And yes, Taking Stock's a podcast from Bloomberg.com as well as iTunes. Now we're speaking with Jack Hidary of Primary Insight. He's talking about what's going on in China. We've been talking about the energy sector. And, Jack, you want to make the point having to do with automobiles. And we all know that the Chinese are falling in love with automobiles just as Americans have formerly fallen in love with the car.
And this has huge implications, Pim, for oil and for the price of oil globally. Let's look at the numbers. United States of America, 250 million cars in this country, 800 million worldwide. 65 million, only 65 million cars right now in China, projected to grow to 500 million cars over the next number of years.
Tenfold increase, more than tenfold increase.
Exactly. That means if you look at China's oil consumption today, 7.5 million barrels of oil a day. Compare that to 20 million barrels of oil a day for the United States. Imagine what happens when China goes from 65 million cars to even 200 million cars. Think about what the oil consumption does. Oil primarily used for transportation fuel. So we talked before about power generation in terms of power plants. Now we're talking about liquid fuel. And if you think that the price of oil is volatile now, imagine when China kicks into gear in terms of vehicles. China will be the fastest growing, and is right now the fastest growing automotive vehicle market in the world.
All right, but having said that, then do you invest in oil companies because you want to capture some of this volatility, or do you step back and wait and see what happens?
You want to make sure that you're focused on a couple different areas. First of all, look at the Chinese auto companies. Look at BYD. Warren Buffett put his money there. Why did he do that? There's more than 300 car companies right now in China. 300. A handful in this country, 300 in China. So it's important to look at both the auto companies and then possibly a play on oil. But the play on oil, of course, has many factors. I would look to more specific play in terms of China. So when it comes to oil, very important to look at the consumption issues, because the entire world consumes 83 million barrels of oil a day, and the production ceiling is only 90 million barrels. We are going to hit our production ceiling very soon.
And that's going to be thanks to the increased use of automobiles in China. I want to thank you very much, Jack Hidary, the chairman of Primary Insight, sharing your thoughts on China and the World Economic Forum, an attendee coming back from that event. Thank you very much.
Thank you, Ben.